What's up guys, Bill here, and in this video we're going to continue to talk about some earnings season setups. Okay, so we've already went over the IV flush, and today we're going to talk about something called the power earnings gap, or PEG. I'm going to be using Netflix for this example as well. And basically what a PEG is first you get some type of earnings report, and it doesn't always have to be positive to send a stock shooting up, but usually is. And you get a big gap up, and you can see here on Netflix on the daily chart we had earnings after hours here, and the next day we got the huge gap up. All right, so you're looking for the big gap up. Okay, it's even better if the gap tends to happen over a key level. So here we see this thick red line. 252 had been some pretty good resistance on the daily for Netflix. Here was a big reject here, going all the way back to August. It had trouble getting up over that level. So, with the gap going over that key level, it's even better, okay? Also, the next thing you're looking for is the day following the gap up, you want to see a nice bullish candle on high relative volume. Now, to be honest, I don't love how much of a wick there is on this candle. I'd want it to look more like this candle or this candle, but it's still a pretty solid bullish candle. And look at the volume, right? That's, one of the highest volume days, second highest volume day going back to like after their last earnings in July. Now, how do we play this setup? Well, usually, one of two things is going to happen. After you get the confirmation that yes, this is a power earnings gap, we got the gap, strong bullish candle the next day on volume, either you're going to see some continuation right away, but a lot of times you're going to see a little bit of a breather, people taking profits, some consolidation before the next leg up. So what we see here is I like to play the breakout of the previous day's high. So the day after the earnings gap, I make that purple line there. So the next day, if we're looking for that, we never get it. See, the wick doesn't even touch it, and it forms, consolidates here on much lower volume, actually forms an inside bar, which, as you guys know, if you follow the channel, is one of my favorite setups. And so on that third day, we're doing the same thing. We're keeping an eye open for the breakout of the high from that power earnings gap. That's where we're going to look to take an entry. It doesn't have to be where you take your entry. Like, you could look for support. For instance, look at the gap that was created. So from this dotted green line to this dotted green line, that's where we closed the day before. Earnings came out. We gapped up. We opened here at this dotted line. And look at the support, right? So you could be looking for this to hold, and that's even better risk reward, is to look for this area to hold and take calls. Both are great, As far as looking for the continuation, the breakout is one way you play it. That's why I drew that purple line here. And then you can also look for this start to flag, start to consolidate. Sometimes this takes a couple days, 3, 4, 5 days, and then you get the breakout. It just depends. But the key thing is, the earnings were positive. Buyers were excited. They stepped in. A lot of people bought, and no one sold enough that we lost this gap. The gap held. The next day was very low volume, and it held. And if you follow anything about volume price analysis, you know that seeing that big volume gap up on a nice move and then consolidation on lower volume is a hint that it's very bullish. Okay, so let's look at like maybe the 5-minute chart, and we'll keep that purple line in mind and see how we would have played this intraday if we were going for the breakout. Okay, so we get a nice move up. We're still not really close to the highs. We start consolidating, and then bam, a nice big 5-minute candle finally pushes us up over that high of the gap day, and then we start to flag again. This is exactly where I'm entering. You try to look for a little bit of a pullback towards that key level, that high a day that we're trying to break out. We start to consolidate again, and look, another big move up, more consolidation, a little pull, another nice leg up. This is very strong price action. And you can probably even, throw your EMAs on there, and you'll see that they're pretty much holding the 9 or the 20. As soon as we break this and start to consolidate, it really never looks back. You can ride the 9 and the 20 all the way up to the end of day for, a nice $11 move up here. But that's really it with the power earnings gaps. The big, just to review, the big things you're looking for are obviously the gap up on good volume. It prints a nice green candle the following day to show that buyers are still engaged. They haven't just taken their profits and dumped the contract back through the gap. And, you're looking for that continuation. There's going to be some consolidation sometimes, and you want that gap area to hold as support. And you can enter calls here if you want, or you can wait for the breakout of the, the high of the previous day. It's up to you. But another great opportunity during, earnings season here. It's going to be a busy week with like a lot of huge names reporting: Apple, Microsoft, Meta, Amazon, I think, like just tons of people reporting. So keep these plays, the PEG and the IV flush in your back pocket, because they can come in handy often this week. All right, guys, thanks.